Good morning, everyone. This is Daily Trading Analysis with another weekly recap for this week, which decidedly is negative. This week has been caught in a dramatic tug of war between the performance of a few tech giants that rapidly reported earnings, such as Apple, Amazon, Microsoft, and Meta, with all reporting pretty good and significant earnings. But on the other hand, there's a darkening macroeconomic and geopolitical landscape. The dominant theme is fear. We are going to see later on the VIX spiked this week. Fear is driven by a shocking deterioration in the US labor market, rising instability at the Federal Reserve, and a big spike in geopolitical tensions that has moved from rhetoric to direct military posturing, with Trump ordering nuclear submarines to go near Russia. So we are going to cover, as always, everything, starting with the labor market report. Basically, the headline Nonfarm Payrolls came in at 73,000. Basically, it's a big miss from the forecast of 100,000. So this is the first thing. But the truly alarming part was the revision. The job gains for May and June were revised down by a staggering 258,000. This is a colossal adjustment that fundamentally changes the narrative. It tells us that the US economy was far weaker in the second quarter than anyone realized. And the cooling trend that is hiring, it's not just a gentle softening, it's a rapid deceleration. And this wasn't an isolated signal. The JOLTS job openings came in at 7.437 million, which is still confirmed weakness in the labor market. So this changes one of the staples that founded the narrative for the people. We have a strong labor market, so we are not in a recession, right? This changes everything. Another thing that changed everything is basically the disarray and instability at the Federal Reserve. While the FOMC officially held interest rates on Wednesday, the meeting revealed a significant plot. Two governors, Waller and Bowman, dissented. Since more than 70 years, this hasn't happened. They were arguing for an immediate 25 basis points rate cut. This is rare and powerful signal of internal disagreement. Waller was particularly forceful, stating that he sees no reason to hold rates and the sudden decline in the labor market. And Williams, a key figure in the Fed's leadership, stated also that he was open to a cut before September. So while the market narrative was overwhelmingly negative, other indicators painted a more complex and maybe also concerning pictures. The quarter 2 GDP growth came in advance at 3%. This is the only positive checkmark in this list. We have the core PCE price index going higher, that's negative. Wage growth, inflationary. We have sentiment signal, Michigan, a little bit lower than expected. We have employment going lower, and basically we have a lot of things that are pushing down this sentiment. But on the other hand, as I said, the mega cap tech sector was basically booming by artificial intelligence. We have Microsoft with pretty strong and solid beat revenues. We have Meta, both of them, they are investing a lot of capital expenditure in AI. A lot of money is being thrown at artificial intelligence. Then, later in the week, we had Amazon also reporting good earnings, and Apple, which is a little bit lackluster on AI. He's willing to acquire and buy other businesses in AI to really short the gap between Apple and the others. But still, strong earnings, revenue beat expectations. This is pretty good. But this market is no longer focused on AI. We know that AI is booming. We know that AI has strong demand. But what happens when the entire US labor market is way weaker than expected, than everyone's realized? When what happens is basically this. I was saying last week that I was expecting really a big pullback, maybe at more than 10%. And as you can see here, we have 2 days of really big sales. This is the NYSE volume, everything it's pointing down, below negative. The outflows are insane. Everyone is selling up here at all-time highs. They don't see long-term expectations of continuing higher. They want a pullback. They are no longer interested in holding at these levels, and they will buy later on for sure. Also, on the Nasdaq, we have strong selling. Big outflows despite the big AI earnings. So what is happening? What I told you. People is no longer interested in buying at these levels when the entire US economy is falling down. We had a pretty bad week. Let's go higher at the weekly level. We have a week of -2% with one single day, yesterday with 2% only. Then we have financials -1.85. Let's adjust this all-time highs. We have all the banks going into the negative. We have yields going down. Everyone's thinking and realizing that the US economy is no longer holding, the labor market is no longer holding everything. Semiconductors, TSM leading the way back down. And as I said earlier, the big spike in the VIX. We had a 2-day 47% of spike, and from 14 to 20, that's a noticeable spike, right? And when this happens, I don't think this is isolated because we were at 14. I think this could maybe reach 30. But what is true is that risk-on assets are no longer there because yields are basically, look at this. Look at the 10-year yield. Look at the short-term 2-year yield. Why? Because everyone's pricing in a big rate cut. Because the economy, the labor market is no longer in good shape. And this is what is happening. So let's go back to the NQ because I think this is the start of the really good pullback. We are going to see people buying for sure, but I think the first two spots in which we are going to be interested in seeing price action, it's at 21,500s and 21,000. So I guess we are going to see this kind of pullback until these two levels of liquidity, and very interested in this daily fair value gap because it has a previous pivot, it has sell side liquidity, And even though from all-time highs we pulled back like 4%, I think there's more. We could see 12%, which is pretty nice for long-term investors. So from where we closed yesterday to where I think price action is heading, it's an additional 8%. So don't be fooled if you start seeing green candles, because I think the selling pressure, it's already there. These internal market internals are not for a couple of days. This is big players selling, and they want to be positioned they want to have better position. So they sell at all-time highs and they don't care. They will buy at these lower levels and they will continuously buying at these levels until the economy or a rate cut comes in. So be really patient, because I think this has just started. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember to subscribe. Remember to support the channel by liking this video, sharing it with others. I do this for you every Saturday on these weekly recaps. And remember that trading, it's all about patience, discipline, and risk management. Thank you for your time. Have a nice weekend and see you next week.